Internationally active insurance groups are used to managing risk. Among the types of risk they manage is political risk associated with their legal domicile. For a Bermuda-based company, it's possible to pigeonhole these risks into three categories: risk associated with social, workforce, political, and regulatory issues in Bermuda itself, political risk primarily stemming from U.S. tax policy affecting Bermuda companies, and risk associated with European regulatory and tax issues. Bermuda has made great strides in building its reputation as a cooperative and transparent jurisdiction in tax law enforcement. Bermuda's good work in this area includes 24 Tax Information Exchange Agreements, or TIAs, with a focus on its major trading partners, and additional legal enforcement action in keeping with international norms on anti-money laundering and anti-terrorism financing sanctions. In Europe, the decision by the European Commission to assess the Bermuda Monetary Authority for equivalency under the incoming Solvency II regime attests to the leadership of Bermuda in modernizing its insurance regulatory framework. If the equivalence process is successfully concluded, it allows Bermuda insurers with European subsidiaries to conduct business from Bermuda with a cooperative partnership with Europe and without fear of regulatory redundancies, reinsurance collateral, or capital penalties. In the United States, international jurisdictions have fought back against the ill-conceived protectionist reinsurance tax advocated by a handful of self-interested U.S. insurers. After 4 years of the fight, the public policy verdict seems to be that the proposed legislation, H.R. 3424, is ill-advised. Taking the actions and environmental changes of Bermuda, the U.S., and Europe together, the CEOs of internationally active insurance groups probably can report to their boards a reduced level of political risk associated with doing business in and from Bermuda.
In June 2010, Bermuda signed a new Tax Information Exchange Agreement, or TIA, with Canada. TIAs set out a framework for exchanging information between countries to help administer and enforce tax laws. These agreements are typically based on OECD internationally agreed standards and are seen as an important tool to prevent tax evasion in circumstances where there is no comprehensive tax treaty in place. Bermuda currently has signed 23 TIAs and 1 double taxation agreement and has concluded negotiations with all of the G7 major industrialized economies, confirming its status as a whitelisted jurisdiction. While the TIA's primary purpose is to provide for a full exchange of information on criminal and civil tax matters, in the case of the Bermuda-Canada TIA, the implications are even wider-reaching. The new TIA will increase Bermuda's attraction for Canadian organizations looking for an offshore captive insurance jurisdiction, and will also offer Canadian businesses trading internationally the opportunity of using a Bermuda-exempted company for their international sales under a tax-efficient platform. We expect to see an influx of Canadian companies looking to use Bermuda captives as part of their overall risk management approach, and exempted companies as part of their tax structures. In addition, Bermuda is also attractive as a result of its appropriate regulatory framework and financial stability, its well-established infrastructure, and strong reputation as a center for international business and finance, with a ready and easy access to the commercial reinsurance market based on the island.
ILS structures are an attractive source of capital for specific insurable events such as wind and earthquake perils, and could be an alternative and cost-effective complement to traditional reinsurance. According to Aon Benfield, outstanding bond values totaled $11 billion to September 30, 2010, and the ILS market has seen $31 billion of cat bond issuances since 1997. 2010 issuances are over $3 billion. Why should an ILS structure list? A BSX listing provides a platform for issuers to achieve a recognized level of transparency, thus directly responding to investor need for greater flow of information. Investors typically reward transparency with greater asset allocations. Thus, the transparency provided by an exchange listing and secondary stock exchange support will help drive the development of this asset class. Since the BSX entered this market, 10 ILS structures have listed with an estimated market cap of over $1 billion. All of the structures are catastrophe bonds and are insuring wind and earthquake perils. Bermuda is a respected and proven international financial center and is committed to accelerating the convergence of the insurance and capital markets here. The Bermuda Monetary Authority last year made important changes to the insurance company licensing regime to streamline the process so it is now easier and more efficient to incorporate special purpose insurers, which is the basis of most of the ILS structures we are discussing. All stakeholders, insurance companies, the Bermuda Monetary Authority, The Ministry of Finance and the BSX are committed in their support of the development of the ILS business and the convergence of insurance and capital markets in Bermuda.
Sukuk is an investment certificate structured under the principles of Islamic finance, representing ownership stakes in well-defined revenue-generating assets. The GE Capital Sukuk offered under the Regulation S and structured using a Bermuda limited liability exempted company testifies Bermuda's legislations are tried and tested by rating agencies, regulators and investors globally for Sukuk structures. Bermuda companies and trusts are attractive for various Sukuk structures such as Mudaraba, Musharaka, Murabaha, Ijara, Istisna and Wakala. Bermuda does not only serve as a domicile of choice for Sukuk issuer vehicles, but plays an even more important role in facilitating cross-border investments and capital raising activities. Bermuda offers an excellent and very stable platform from which Sukuk issuers can confidently structure, list and manage cross-border Sukuk structures originating from and or accessing U.S. capital markets. The main advantages Bermuda has to offer for U.S. Sukuk structuring are its well-established and trusted partnership with the U.S., the double tax treaty signed with the Kingdom of Bahrain, which provides structuring opportunities for investors accessing the GCC region, its tax efficiency, and its geographical proximity. Bermuda Stock Exchange fully electronic capabilities offers attractive opportunities for listing Regulation S Sukuk offerings. In fact, Bermuda offers administrative and cost efficiencies in that issuers may structure and list Sukuk in a single jurisdiction. As an emerging Islamic finance hub in the Western Hemisphere, Bermuda is well suited to facilitate Sharia-compliant cross-border investments and capital raising activities targeting the U.S. capital market.